So let's talk about the biggest question in the market right now, NVIDIA. I mean, is this incredible rise the real deal, the foundation of a brand new AI-powered economy, or are we just watching the biggest bubble in history inflate right before our eyes? To even begin to answer that, you got to start with the numbers.
Okay, let's start with a number that's, well, it's kind of hard to even wrap your head around. $57 billion. That was NVIDIA's revenue in just a single quarter. It's a figure that puts them in a totally different league, but honestly, it's the growth that's truly mind-blowing.
A 62% increase in revenue year over year? For a company this massive to be growing at that kind of speed it's practically unheard of. But the metric that really makes your jaw hit the floor is this next one.
A projected gross margin of nearly 75%. Think about that. In a world where selling hardware is usually a tough, low-margin business, that number is just extraordinary. It screams incredible, almost monopolistic pricing power.
And this isn't just happening in a bubble, no pun intended. We've got major investment banks out here calling this a once-in-a-generation capital spending cycle. They're saying this is fundamentally changing our economy as companies just pour billions into the exact AI infrastructure that NVIDIA builds.
So yeah, this brings us right back to that core question. Are these numbers the legitimate birth of a new technological revolution, or are they the classic telltale signs of an irrational bubble that's just destined to pop?
So here's how we're going to tackle this. First, we'll dive into the bull case. Then, we'll flip it and look at the bear case. After that, we'll check out the competitive landscape, and finally, we'll talk about what you should be watching next.
All right, let's get into the bull case. The whole argument here is that NVIDIA's valuation isn't just justified, it's been earned, and it all boils down to one powerful concept.
The competitive moat. Those big protective walls a company builds around its business to keep rivals out? Well, for NVIDIA, this isn't just one wall. It's like a multi-layered fortress, and every single layer makes the others even stronger.
So think of it like this. Their amazing chip architecture, like Blackwell, builds the high stone walls. Then, their CUDA software ecosystem, that locks the main gate. The full-stack integration makes their kingdom the only place anyone wants to be. And their control over the supply chain? Well, that means they own the only bridge in and out. See how each layer just reinforces the others? It's brilliant.
NVIDIA's own CEO, Jensen Huang, he calls it a virtuous cycle. Every new leap in AI demands more computing power. That demand funds the next big leap, which, you guessed it, creates even more demand. It's this powerful, self-fueling feedback loop that just keeps accelerating.
Now here's something that's super important, and it really pushes back on that bubble talk. Yeah, the stock price has gone to the moon, no doubt. But here's the kicker. The company's earnings have actually grown even faster. Just look at the price-to-earnings ratio. A year ago, it was around 55. Today, it's down to about 33. Same story for the price-to-sales. The business is literally growing into its giant valuation, which, crazy enough, makes it look cheaper by the quarter.
Okay, but we have to look at the other side of the coin. Let's dig into the bear case, where the skeptics are seeing some really dangerous parallels to a very famous tech bubble from the past.
This quote from Michael Burry, yeah, the guy from The Big Short, it pretty much sums up the entire bear argument. He's not saying there's any fraud. What he's saying is that NVIDIA is the Cisco of the AI boom. Remember them? The picks and shovels company whose stock got way ahead of itself during the dot-com bubble and then absolutely cratered?
So, is that a fair comparison? I mean, the hype definitely feels similar, but when you look at the fundamentals, it's a totally different story. Today's NVIDIA has this rock-solid balance sheet with more cash than debt. Cisco back then, they were funding their growth with inflated stock. And the demand? Today, it's coming from real, profitable cloud giants running actual workloads right now, not from a bunch of speculative startups building for a future that might never show up.
And that really gets us to the heart of the modern bear case. The big question isn't whether NVIDIA can sell its chips. Of course it can. The real question is, will its customers, the ones spending billions and billions of dollars, ever actually see a return on that massive investment?
So this is the core fear, right? Customers are taking on huge amounts of debt to build out all this AI infrastructure, but is it actually going to be profitable for them down the road? Skeptics are also raising some accounting questions, like, are these companies depreciating their super expensive GPUs over a realistic time frame? The ultimate risk here might not be NVIDIA itself, it's whether its customer spending spree is even sustainable.
But this story isn't just a simple bull versus bear debate. Because for the first time in a long time, NVIDIA is facing real, credible competition that could change this whole picture.
We've actually got a legitimate three-horse race now. You've got AMD coming in strong with chips that have a memory advantage for certain AI jobs, and they're pushing super hard on open-source software. Then there's Intel, and they are laser-focused on offering better price for performance, especially for enterprise customers. So see, they aren't trying to fight NVIDIA head-on, they're attacking from different strategic angles.
But the even bigger threat? It might not even come from another chipmaker. It might actually come from within. NVIDIA's most important customers, we're talking the giant cloud providers, they are working around the clock to become its biggest competitors by designing their very own custom AI chips.
And this chart, wow, this really shows you the risk. Look at this concentration. Just 2 customers, 2, account for a whopping 39% of NVIDIA's revenue. That's an enormous dependency. If even one of those giants taps the brakes on spending or actually succeeds with its own chip, the shockwaves for NVIDIA would be just massive.
And on top of all that, there's a war being fought on the software front. Remember that powerful CUDA moat we talked about? That software lock-in? Well, there's a whole coalition of open-source projects trying to systematically dismantle it. They want to break that lock and turn the hardware underneath into a commodity. If they pull that off, NVIDIA's biggest advantage could just evaporate.
So with all these different forces pulling in different directions, what are the key signals you should actually be watching to see how this whole story unfolds? Okay, here are the 4 big things to keep an eye on. First, market share. Are competitors like AMD and Intel actually starting to carve out a piece of the pie? Second, custom chips. How good are the next-gen chips from Google, Amazon, and Microsoft in the real world? Third, software. Is open-source stuff like ROCm actually gaining ground on CUDA? And fourth, and this is the big one, customer ROI. Are we seeing clear, undeniable proof that customers are making real money from these massive AI investments?
So in the end, the whole debate is changing. It's becoming a story of NVIDIA's widening lead in hardware versus its narrowing lock-in on software. The game has really shifted from a near monopoly to a full-blown competition. So maybe the question we should be asking isn't, is NVIDIA a bubble anymore? The better question now is, with all these forces in play, for how much longer can they possibly keep up this incredible, incredible trajectory?